Hello and welcome to our channel 5 Minute Finance. Today I have an interesting update about Deepak, Rakesh and Prakash and their SIP dilemma. In our earlier video we saw how these three colleagues were confused over selecting the SIP date to earn better returns. But after looking at the numbers, we discovered that the date they picked does not really affect their SIP returns. So now they know that they can freely choose any date for their SIP investments that suits them best. It won't make a big difference in the returns they'll get on their investments. But Deepak this time has stumbled upon another idea. He heard from a relative that doing more SIPs could lead to higher returns. So he suggests to Rakesh and Prakash that they should consider daily or weekly SIPs instead of the usual monthly ones while investing in mutual funds. Deepak's logic is quite simple. He thinks that since the stock markets go up and down every day, why not make the most of this daily volatility by doing more frequent SIPs? He believes this strategy could potentially generate better returns for them. But will this new approach work? What do you think? So in today's video, we are going to compare daily SIP, weekly SIP and monthly SIP. And we are going to find out if the more the merrier approach applies to SIPs as well. So let's dig in. For new investors, let's quickly brush up the meaning and benefits of SIPs. So a systematic investment plan is a method to invest a specific amount on a specific date on a regular basis, say monthly, in a mutual fund. The sum gets automatically deducted from your bank and gets invested in the selected mutual fund scheme. SIPs bring discipline to your investing because you don't have to do anything once you set it up. Your investments keep happening as planned from the start of the SIP. Also, when you invest via SIPs, it averages down your total cost of buying mutual funds over the long term. All you have to do is consider selecting consistent performing equity funds and start an SIP for a long period of at least 7 years. If you need some help with it, we have already made a video on the best SIP funds to consider. You can find the link in the description below. You may also refer to other videos to know more about SIPs. Now quickly coming to the topic of the day, daily, weekly or monthly SIP, which is better? So to get to the bottom of this, we looked at the returns from daily, weekly and monthly SIPs done in large companies, mid-sized companies and small companies. For large companies, we looked at the returns of Nifty 50 index, which represents the biggest 50 companies in our country. For mid-sized companies, we looked at Nifty Midcap 150 index that represents the companies ranked from 101 to 250 in terms of their size. And for small cap companies, we saw returns for Nifty Small Cap 250, which represents the companies ranked from 251 to 500 in terms of their size. So look at the last 10-year returns from April 2013 to March 2023 on your screens. So when you are investing in large cap companies, your return on investment is 12.44% in case of daily SIP, 12.45% in case of weekly SIP and 12.44% in case of monthly SIP. So we can see that there's hardly any difference in returns for different SIP frequencies in case of investing in large cap companies. Similarly, if you see for the mid cap and small cap investments, you'll find negligible difference in the returns. So now we can say that opting for daily or weekly SIPs does not provide any additional advantage in terms of returns as compared to monthly SIPs. In fact, they come with their own complications. Most platforms allow you to do monthly SIPs, not daily or weekly. That means if you want to opt for the daily or weekly ones, the burden is on you to carry them out. Also, remembering to do it and finding the time to do it every week or every day, a task that can be burdensome. Secondly, your record keeping responsibilities will go up. With monthly SIPs, you will have 12 annual entries per fund if you only buy. With weekly SIPs, you will have 52 entries per year per fund. With daily SIPs, well, I think you got the point. Third, taxation becomes tricky when you do daily or weekly SIPs. As you would know that each SIP is a fresh investment and has to be accounted for separately. So daily or weekly SIPs can multiply your workload significantly without compensating you appropriately. Now, of course, the fund house may provide you with a ready statement, but would you be happy to receive multiple PDFs of multiple pages? Well, so no doubt SIPs have become synonymous with monthly automated investments. Also, most people have a monthly income cycle, so monthly SIPs perfectly gel with that frequency. So by all means, opting for monthly SIPs seems to be a better option than daily or weekly SIPs. And to make higher returns, well, keep investing without making any mistakes and you will be able to fulfill your goals in time for sure. That brings us to the end of this video. If you liked this video, do not forget to hit the subscribe button and do share this video with others as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.